this webinar is to cover the way how to think about economic events like this, what the government needs to do to respond to it, both in the short term and the medium term, and what it means for business. Well, given our respective background, I'll be focusing on how to frame the issue, and David will focus on what it means for policy and business. We have the technology enabled here, so if you have questions along the way, feel free to drop a line using the chat function, and we've got Suzanne here who will collect the questions and join us in Q&A.
Thanks very much, Ben. Well, look, to set the scene, let's first start talking about the economy and where we are today. So the data that have been released in the last few weeks have confirmed what we've really known for quite a while now. The Australian economy is in recession. And in fact, it's in its first recession that we've had in the last 3 decades or so. I think this graph characterises pretty well the sort of situation of where we are today. There's been a quick jump up in the unemployment rate, and there's probably more to come. And there's been a particularly stark rise in the number of people who are underemployed. These are people who are still attached to a company, but are no longer working the kind of hours that they were working before the crisis from there. Now there's lots of numbers being bandied around about just how steep the initial downturn is going to be. Some a bit higher, some a bit lower. The data that were released, or the projections that were released by the Reserve Bank just last month, are probably pretty typical of what most people are thinking. A big decline in output, GDP, by around about 10% over this quarter and perhaps the next. And also a jump up in the unemployment rate from 5 to around about 10% or so. Now it's possible that things will be a little bit better than that. The Australian economy seems to be recovering quite well at the moment, but it's also possible that when all is said and done, the numbers won't be quite as positive as that, particularly if there were to be a second wave play out here in Australia or abroad, or if the financial pressures turn out to be more severe than we're thinking right now. But broadly speaking, that's the kind of numbers that we're seeing for this downturn. But Ben, you've been teaching macro for the best part of 10 years. How does this recession compare in both its magnitude and its characteristics in the sorts of things that we've seen previously?
Well, in terms of the scale, it's actually much bigger compared to the typical economic downturns that we've seen in the past. In fact, people talk about compare the current situation with the Great Depression rather than the 2008 global financial crisis. Well, the pandemic pretty much affects every aspect of the economy, but nevertheless, we can organize our thought into 4 of the following interrelated aspects. Well, firstly, it's a health shock. It's a shock to our public health system that threatens to overrun our hospitals. As a result, governments need to step in and pretty much shut down part of the economy, which leads to a restriction on supply. Now, households now facing redundancies and reduced hours, they are more likely to reduce their spendings on non-essential items, which leads to a lower demand. And lastly, the financial market had a run, investors seeking to reallocate their portfolios away from risk. Now, all these 4 aspects contribute to a rising uncertainty, which just reinforce the negative impact of the 4 aspects that I just outlined. It's a pretty tough environment for business, for policies, isn't it?
Yeah, it definitely is. And as you pointed out, Ben, that there's some pretty unique characteristics of this downturn compared to the past. But we're not actually flying blind here when it comes to how to handle this downturn. We've seen downturns before, as you mentioned, and some of those have been pretty large. And we've learned a thing or two about what sort of policies are necessary to start putting the economy back in order after those sort of effects come along. 3 things in particular that we've learned. 1, that it's very important to have large upfront measures that immediately start to address the deteriorating confidence that people have when suddenly they see things becoming really bad around them. So shock and awe in the policies is really part of the purpose, not just in order to be big enough for the effect, but to make people feel, wow, the policymakers have really got this in shape. They've done a very large response, which helps starting to stabilise those confidence areas. And so it's very important that those measures also address the things that most forefront people's minds, incomes and jobs, and that there's a commitment that the authorities are going to do whatever it takes as events unfold. And if they're worse than that, there'll be further coming along. Now, Australia's done that pretty well. And that's one of the big reasons, I think, where we're starting to see confidence feeling like at least it's stabilised. Obviously, the health measures have been a big part of that as well. Now, when you think about the actual nature of the policies, usually you can rely on monetary policies, which is the big movement in interest rates to help. To start sort of putting money in people's pockets because it's cheaper to service their debts, or perhaps to make it cheap for anyone who does want to go out and borrow to spend. That hasn't been one of the policies that have been available at this time. Interest rates are already very low just before the crisis began. So there hasn't been much scope for any further reductions in that area, either here or around the rest of the world. In fact, central banks' role has just been to make sure there's plenty of liquidity across the system, which has provided the financing institutions like banks to be able to ensure, to be able to have the funds to allow debt deferrals by businesses and households. That's meant that the vast bulk of the work has really fallen onto the fiscal authorities. And in the fact that fiscal authorities have substituted their own income to households and businesses in order to compensate for the loss of income by both the private sector in general, both at the household level and also at the business level. Now, that's been a really important approach so far. And, seems to Australia, in fact, if anything, has actually had one of the largest of those fiscal responses so far, something in the order of around about 10% of GDP. And I think that's been a very positive way to start moving through.
Right, so given the policies in place, Australia seems to do pretty well compared to the rest of the world. So the virus is pretty much contained. We are on the pathway back to reopen our economy, and share market rebounded. But there's one aspect which still seems to be a bit gloomy right now, which is demand. Would you agree with that?
Yeah, this is, again, one of those lessons that comes from the past. You can have a big shock, you can start to stabilise the economy, but it generally takes a long time, and I'm talking years here, before you manage to get the level of spending back up to what it was before. You can think about this recovery in two phases. One is the initial bounce back, where things start to reopen, people start to be able to spend a bit more, perhaps go to the pubs and so forth. And that sort of, is exactly the kind of phase that we're all in right now. And that's a good phase. But another important question is, what level of spending do you bounce back to? There are reasons to think it's going to take us quite a while to get back to the level of spending that we had as recently as the end of 2009. Just think, look, first of all, some sectors are not actually reopening. Think about international travel and tourism, both inwards and outwards. That's going to take quite a while until we get back to that level again. Population growth is likely to be much slower than the sorts of rapid pace we've seen in the past. That means less demand for housing and those sort of aspects. But the big thing that tends to weigh on this spending, the demand side, is just that everyone, households and businesses, tend to be very, very cautious in their spending patterns after these sort of shocks. It takes them quite a while until they're ready to kind of open their wallets again and spend in the same ways that they were doing before the shock. That's going to be a period that's going to be with us for quite an extended period.
What does this mean for business?
Well, I think businesses have to realise that they're in a very different kind of world than the one that they had as recently as the end of last year. There are four particular characteristics that I'd like to focus on that are all really very related. The first of those, of course, is just the supply chains. If you're a business that's relying on supply chains coming from, let's say, overseas, particularly countries that are still grappling to get in touch with the health issues with shutdowns and businesses closures and whatever, then you're more vulnerable than you were before this onset. What about also the supply chains coming from businesses that are no longer there? Not every company has been able to stay afloat during this period. And so if you're reliant on companies that are either no longer there or particularly maybe looking uncertain, you better make sure you've got a pretty deep level of resilience in your supply chain. I'm talking about sort of having sufficient stockpiles of essential items, having diverse set of suppliers, do the heavy lifting to think about where you can get essential items if you can't get them from the traditional place. But the second aspect is the one that we were kind of talking about before, that demand aspect. Because the level of spending by the private sector isn't going to be the same kind of level as we saw at the end of last year.
Yep.
That means that businesses are going to be competing even more aggressively with each other to try to get the limited amount of sales that's around. And I'm not just talking about competition of businesses within Australia, but also companies that are located abroad that are wanting to sell into Australia.
Yeah.
So if you thought the competition was pretty intense before this crisis, just wait till you see what it's going to be like in a very moderated spending pattern world that we're going to see for the next few years. And that leads to two other points that I think are really important for all businesses to carefully assess today as they think about a post-pandemic world. The first of those is just the consumer has changed their preferences. They're looking for value in ways that are different from what they were looking before. You know, there's been a lot of learning about online, what you can do, how successful it can be, its challenges and so forth. That's likely to have changed the sorts of things that all clients want for business, whether that's at the business level or in the household level. Are businesses really making sure that they're providing the value to customers that they want following this kind of aspect? Are the customers that have got more used to online purchases or interactions, are businesses responding in that way, having robust systems to be able to do that? And that's a careful thing that every business is going to have to think about. Clearly, it's going to vary a bit. Some businesses are not in that kind of a space, but others certainly are. Yep. And that's going to be an important sort of aspect, not just at the shopping level, but think about sort of things like gyms, where people have got used to sort of, online classes. Maybe that's a preferred option. Well, how are they going to respond to that? And that leads to the fourth aspect that I think is really important for business. And that is to think about, well, as you're going and providing value to your customer, what kinds of investment are you going to be making? Probably it's not the environment to go and start building new factories and lots of machinery, very expensive sort of things. But what about IT systems? Are they fit for purpose for this new value-conscious customer that's very cautious in how they spend? What about research and development? Is that adequately focused on niche areas that you can do well? How about the cost side? You know, we've all gone through the Zoom and Skype kind of world now. How do you basically utilize the fact that we can actually have these online meetings? We don't need as much travel, and we can function in ways that are different from what we had beforehand. As I say, for every company, it's going to be a bit different. But I think for every company, there's going to be a real need to just check your business model and make sure it's fit for purpose for this kind of a post-pandemic world.
It seems like certainly it's going to be a steep learning curve for business moving forward.
Yeah.
Well, talking about future, you often hear concerns about, withdrawal of government support, rising taxes, and public debt in general. Are you worried about these things?
Look, I think these are very important, obviously, but they're not front and centre of the sorts of things we have to worry about today. You know, there's a discussion in the media, hear it on sort of talkback radio and stuff about the fiscal cliff, that come September, suddenly the government's going to withdraw all of its spending because that's when the initial programs phase out. That's not very likely to happen. In September, we're still going to be having an economy with too little private sector spending going on, which means there's going to be a role for the government to continue to provide assistance to the economy. Now, it may not be in the same kind of form as it is today. You know, it's quite possible that the kind of generalised support, generalised income support that we've seen in the programs to date, that they change their character and become more targeted to the specific sectors and the specific individuals that are most in need. But the idea that we're going to see a sudden reduction in government spending in the next few months or so, I don't think that's very likely to happen. In fact, I think the dance to change that is kind of underway already. Similarly, the idea that because there's a large deficit and hence a large rise in public debt, that we're going to suddenly see a big tax increase that's going to affect households and businesses just as the economy is recovering. I don't think that's very likely to happen either. In fact, if you look in the past, the sorts of things that governments have done to try to reduce the debt burden, which is the public debt as a share in GDP, is not to work too much on the public debt bit, but rather to work on the GDP bit, getting a robust, strong economy, which reduces the burden of debt as a share in GDP over a period of time. And that's, I think, the more likely way that we're going to see things from here. But, you know, another thing you hear about, Ben, and this is kind of your area as well, is there going to be an inflation outburst? With all this money being pumped into the economy through the central banks and government spending, are we likely to see a rapid pick-up of inflation? Do you want to talk about that?
Yeah, so inflation tends to happen in one of the two following scenarios. So scenario one is when you have demand above supply. So firms bump up their prices to maximize their profit. Well, in fact, I can't foresee there's going to be a strong demand in the next year or so. And in fact, demand has been very weak since the global financial crisis. Scenario two is when you have disruptions, major disruptions to your supply side, where cost of production has gone up. Now, firms in this case bump up their prices to keep the same rate of profit as they desire. Now, there are some disruptions on the supply chain, no doubt about that. But I just can't foresee this is going to lead to a widespread inflation in the coming years. Well, if you think about this liquidity injection by the central bank, what it does is to provide the crucial liquidity to those who need the credit. It doesn't mean the same as printing money and just spend it. It's just completely two different things. Now, thinking about inflation, that's probably not something that we need to worry about, neither the fiscal space. There are some medium-run challenges. One of these challenges is unemployment. So as you can see on this chart, unemployment rate tends to increase during economic downturns very sharply. Okay, it's just like a shoot up. And it takes years, a good decades, to come back to its original level. Another aspect of it, as indicated by the blue line, is youth unemployment. Well, economic downturns tend to impact on youth disproportionately. So if you think about the 8% or 10% of unemployment rate is pretty bad, then the youth unemployment rate, it doubles that number. And there's no quick and easy way to solve this challenge, isn't it?
Yeah, so you're talking about those who age, between 15 and 24 years of age or so. I think that's what your line was showing here on the graph. Yeah, it's understandable that they're the people who are most affected by the downturn because by definition, because they're young, they have the least skills relative to the rest of the population. And they don't have much experience because they haven't been in the workforce thus far. And, if what you say from history is indeed going to play out this time with unemployment staying at a high rate, certainly much more than the 5% overall number we saw last year. If it's going to stay at a high level for a long time and it's particularly going to affect youth, then it really suggests that we're going to have to think very carefully about what kind of training programs and how do we deal with that youth unemployment problem over the next coming years. If you think about it, the technology is moving in ways and has been for a long time now that increasingly focuses and rewards people who've got skills rather than the unskilled people.
Yeah.
And also think about it that youth have a benefit in that they are young today, but with 30 or 40 year careers ahead of them, which is a great time to use whatever skills they can get today over the balance of their working careers.
Yeah.
So this really would suggest there must be a very high premium on basically trying to make it very attractive and relatively easy for youth to upskill at this period of time, particularly when there's not a lot of job offers going on around. Now that may be at universities like this one, at Macquarie University, to prepare for those kind of new skills and the future ahead. But it could also just be at TAFE or other forms of VET. And furthermore, it doesn't have to be just the traditional face-to-face like kind of instruction. We've all, as you know, just as well as I do, Ben, we've all become much more familiar with delivering classes online and using that as a way and a vehicle for people to be able to undertake an upskilling process from there. So I think that that's going to be a really important aspect. And to the extent we're successful in that we get youth to skill up more than they would otherwise had there not been a pandemic, or perhaps there's a little bit of a silver lining on this aspect because those skills will pay off over a very extended period.
I love the word silver lining. It's very positive. David, you've got 30 years of policy making experience. How do you see the way forward for policies and business in general?
Well, look, I think we've got to remember that this is a shock that we have to deal with today. We've spoken a bit about some of the characteristics of that shock and also some of the policies that are necessary. But, you know, when you think about the sort of policies we do now, just not to address the shock, but also to set Australia up for the medium term, I think, you know, we've got some pretty good runs on the board over the last 3 decades that we can rely on. You know, we're essentially a pretty dynamic economy with a strong outward focus, but also with a very well and robust targeted welfare system for the people that are on the wrong side of the changes. They're the kind of characteristics that I think we need to continue to focus on as we move forward from here. So what does that mean in practical terms? Well, it means we want to stay open to the rest of the world. We should continue to do the things that we're relatively good at, produce more of that stuff in our working hours and then trade it with other people in other countries that are also doing the things that they're relatively good at. So keep trade flows open. Still be able to utilise that kind of flow of ideas across borders. You know, there's no reason for us to invent the wheel all the time. There are lots of clever innovations that are being created overseas that we can bring into our own economies, adapt to our own circumstances, and be able to go from abroad. So I think that's another really important aspect. Productivity, that's output per hour. You know, productivity, if anything, the growth of productivity has been declining for a while now. We need to think about the sorts of characteristics that will push that up over time as well. That's really important for our standard of living. Now, there's lots of ideas that are out there, you know, government infrastructure, training we already spoke about, innovation, tax policies, labour market policies, financial policies, etc., and so on. The reality is we know more about the ingredients of productivity than we do about the recipe. Exactly which combination do we need to boost productivity over time? In fact, during the 80s, the 1980s, when there was a big boost to all sorts of productivity, that stemmed from when the government moved across all of these different aspects all at the same time, rather than trying to pass down which particular one is the most important from there. So that's going to be probably the way forward to set us for our foundation for a good growth over the future. But you know, there's not a lot of public resources that are easy around right now. There's a very tight resource envelope in the budget, as we were speaking about before, with the assistance being provided. So it's going to be very important for the government to think very carefully in a cost-benefit kind of approach, which policies are the best ones, which bring the best bang for your buck in the way that the government assists the private sector to undertake changes, reforms, and yet provide them with the income. And lastly, I just want to remind everyone that there are still those long-term issues out there. You know, climate change, the aging of the population, more technology changes which are going to sort of, you know, challenge who's on the right side or the wrong side of those sort of changes. They're very important aspects that need to be thinking about, because whatever we do today is going to set us up for the best opportunity in the future from those. So I think that those kind of characteristics are the ones that are going to be needed. Now that means, you know, we're going to need a lot of still, you know, good leadership, good governance, and also I think a very collaborative, communicative kind of dialogue amongst everybody about what's the best way to go forward so that we end up with a good pace of growth that's inclusive for everybody. That's the kind of format, if you like, that's kind of driven Australia to over the last 3 decades. And what I think is going to be really important to sustain as we move, not just to address these kind of immediate effects, the coronavirus and the sorts of things we spoke about, but also set us up for a good path in the future as well.
Okay, David, I think we had a very nice chat. I certainly enjoyed it. Let's turn to questions. So over to you, Suzanne.
Thanks, David and Ben. So, Ben, one of the things that we've been seeing is negative interest rates being used in other countries. Would this be helpful in the Australian context?
Right. So typically when central bank lowers the interest rate, it's trying to stimulate demand. And the question is whether a negative interest rate will help. Well, if history shed any light, I would think it's less effective than people otherwise would have thought. And on top of that, what it does is to erode the profitability of our financial system, which may lead to a future problem. So I would think no.
So if it's a no, then what interest rate settings do you feel would be of most benefit to the Australian economy?
I think the Reserve Bank have done all what they can do on the interest rate space. So that's why they use the quantitative easing policies that David's talking about, is to address the exact issues that we currently have, which is potentially liquidity.
I'm sure there's a lot of people in our audience that are interested in knowing more about interest rates purely from a is housing going to be affordable question. Are we likely to see a rise in interest rates in the near term? And then what are the key parameters to determine when to start raising interest rates again?
Right, I'm worried about interest rate increase. Well, typically, if you think about monetary policy in Australia, RBA has this inflation targeting framework. So basically, they will be looking very closely on the inflation. Whenever they see there's a pickup on inflation or foresee there's going to be an increase sustained increase in inflation, that's when they start to think about raising interest rate. Now, it comes down to one of the two scenarios that I just mentioned. When inflation will pick up depends on, one, demand, whether demand is greater than supply, or two, perhaps there's a major disruption on the supply chain. Now, history-wise, if you look back into 30 years, 40 years, most likely case is this scenario one, where you have a demand is greater than supply. Now, it all comes down to demand. Okay. When demand picks up, that's when the central bank will think about raising interest rate because of this rising inflation.
So on that then, if demand is the condition that would lead to a rise in interest rates, then could you increase interest rates to shift the aggregate demand curve?
Well, you definitely do, but you want to shift in the right direction and you want to minimize your policy uncertainty. And we know from the literature that uncertainty is pretty bad and policy uncertainty is really bad. So you want to minimize that uncertainty.
Okay, and David, I think when we think about wage growth, that's something that seems to be low for a long time. I know I'm interested in this question, I'm sure everybody else is. How do we get wages growing again?
Yeah, well, look, Suzanne, that's a great question. And as you say, long before we got to the coronavirus crisis, people were worried that their wages were not going up at the kind of rate that they were used to from a decade ago or even longer than that. The thing to remember is that wages growth comes with productivity growth. It's only when the size of the pie expands that you've got the space to be able to also expand the rate of growth of wages. So that's why I was pointing out during our earlier discussion why it's really important that we do start putting down the markers today to lift the pace of productivity growth, because that's the sort of thing that's going to provide the conditions for a more robust increase in wages over time. And for the next few years, frankly, with the unemployment rate being high, it's not likely we're going to see very strong growth in wages. That doesn't tend to be what happens. But as the unemployment rate comes back, demand becomes back closer to normal and so forth, that's where the question about how fast the economy is growing, its productivity rate, is going to become increasingly important. And that's why it's so important to start thinking about those policies today, because they don't tend to pay off for a few years even after you put them in place. So that's kind of the key to that.
What's interesting in that is that you mentioned productivity will increase wages. So I know that in different sectors such as tech, we're seeing increases in productivity, particularly in the areas of AI and digital innovation, but yet the wages are not increasing in that sector. So is there a reason for this?
Yeah, so a lot of people think like that the wages growth is going to be reflective of what's happening in that particular industry. But actually, we like to say in the economics profession that wages are set endogenously across the economy. If someone in the tech business, an employer wants to hire someone new, they get them from outside of the tech area. If there's plenty of labour out there, then they're only going to pay whatever the labour requirement of that is. So therefore, what we really need to get wages growing across the economy is to have productivity growth happening in not just one sector, but happening across all of the economy. And then gradually be able to boost the demand for labour. And that's also partly, by the way, why it's going to be so important to have skilled labour around as well, because the skilled labour is the one that obviously is the most valuable.
Thanks, David. So we've got a lot of great questions coming in via Zoom chat right now. We've got our first question coming from Mahid, and Mahid is asking, what are some of the risks associated with the current monetary policy settings, and what should we keep an eye out for? Good question, David.
I'll pass it to Ben. I think he's the one who's carrying the monetary policy stuff.
Well, the risk, I think Australia is doing it pretty well. You know, I tend to think about the risk is outside Australia rather than within Australia. Would you agree, David?
Oh, yeah.
Yes. So as I mentioned earlier, the RBA is actually doing a fantastic job in minimizing policy risk by communicating clearly, as David mentioned, there's a communication premium here, to the public, what they expect and how they see things. You know, there's a regular monetary policy statements is coming out, and also for the current round, the governor is actually explicit to say, well, we're going to target a particular interest rate for a particular time frame, and that's very specific. And in that sense, I think it's not much of a risk being run in Australia compared to the rest of the world, which is doing a much.
And David, I know that you were mentioning the youth being the people that are probably most affected. There's a question here from Glenn, and he says, are the young more vulnerable because of the type of work they're doing? Do youth participate more in part-time and retail type work while studying? So it's not such a problem, and in fact they're upskilling, not necessarily working in their career jobs yet.
Yeah, and that's definitely a big element of that. In fact, young people tend to move around a lot of jobs as they try different things out until they find the thing that gives them the kind of passion and interest to stay in that particular sector. And in addition, just as being pointed out by Glenn, they also are there as they're studying, they do work part-time and in jobs in hospitality areas and so forth from there. So to some extent, the big jump up in the unemployment rate that we've seen right now is because those sectors have been closed down, and we're hoping, of course, that those jobs come back again fairly soon. But nonetheless, the fundamental point remains that many young people don't end up skilling sufficiently while they have the opportunity to be able to do so. And the fact that the higher level of skills that they achieve today will set themselves up for the future many decades of a working career. And that's important, particularly important, as I was pointing out earlier, because the technology is moving to favour skilled labour over things that can just be automated, which tend to be more of the unskilled.
Thanks, David. We have another question from Niharika. I apologise if I haven't pronounced your name correctly. In the latest suggestion slides, you mentioned focusing on developing new technology. In this scenario where the economy has reduced spending altogether, do you think people will be motivated to spend more on R&D?
Yeah, so that's a fantastic question. And I think it's important in technology to think that there's two types of technologies around. One is that kind of cutting edge frontier technology where this generally tends to be very expensive and there's lots of failures. In fact, that's one of the reasons why advanced economies grow relatively slowly, because they're at that kind of frontier and they're moving ahead, and it's just a very difficult process. There's a lot of technology that's just adoption and adaptation of ideas that have already been shown to be successful. And this is an area I think that companies want to be looking very carefully about, thinking, well, are they themselves in their own company really, have they moved close to the edge of what is the best practices that's already been shown to work in other companies? That's the sort of technology I think is really going to pay dividends here. And it tends to be a lot cheaper because the risk has already been taken out by people showing that it works. So I think they're the sorts of things that are going to be the premium right now as people, as companies set up for the new post-pandemic consumer.
Okay, we've got our last couple of questions. So you're not sweating many. I was hoping that the audience was going to give us some really toughies. Okay, so we have a good one from Adil, and that question is, research is suggesting that the working week should be 4 days a week, which will help productivity by the employees and for the business. How will that help our economy?
I'll take that one, I guess. Look, in fact, as we grow richer over time, i.e. as we're able to produce more for each hour of work, many economies are actually reducing the amount of hours that we work. You can see this across most countries, not in the United States, interestingly enough, but in most other countries. That as we grow richer, we choose to take some of that additional productive benefit in more leisure time, which is not surprising because people not only value consumption, they also value their leisure. So there's kind of a bit of a preference towards being able to rebalance the work-leisure choice as our opportunities increase. But I think the question has touched on another issue that, we've shown from this episode that working from home is quite viable, that you can actually have good meetings, have good interactions, continue on the work, at least to the extent you already know your work colleagues. It's going to be interesting to see whether that works well if you've never met the person in your job, whether or not you need more face-to-face at that time, but that's a question that we'll see over time. The point is that if we become more productive, or at least if we can continue to do the sorts of things from an online site, we don't need as much moving around and so forth, then what do we do with the benefit of that time? Do we actually say, well, that's actually more for people to be able to take in their leisure time, or do they actually end up having more work coming through? And that's a question that we're going to have to work. And I suggest what's going to happen. Some companies are going to say, let's move towards a lower level of work hours and bring that benefit to the employee rather, where other companies will make different choices. And that's kind of the richness of what we're going to see as we come out of this event. The good thing is that since everyone's now been skilled up in how to do that, we've got more of an opportunity to be able to take advantage of that.
Great. So our last question is from Deb, and the question is, despite the grim outlook post-COVID-19, the S&P ASX 200 index gained around 35% since it bottomed out in March. What is the reason behind the stock market defying dimming economic outlook?
Ben, I'll leave that to you.
Well, the stock market did rebound quite quickly, isn't it? And in some sense, it's actually quite soothing in a way. There are reasons behind it. I think Federal Reserve played a role, and the confidence plays a role, and the general sentiment plays a role. Now, whether this is a good thing or a bad thing, it depends. And a lot of forecasts are out there saying the stock market has been overvalued, but that's just one view about it, along with the other views that it's pretty good. Well, if you look at Australia, the stock market has been rebounded, but not to the point that we are at the highest before the pandemic. So I think stock market in Australia is investors in general, it takes a more cautious approach, which I think in general serves us better in the past, and hopefully it will serve us better this round as well.
Wonderful. Thank you so much for your time on questions today, David and Ben. That concludes our Q&A for today. We're now going to go back to David to summarise the big picture takeaways. Thanks, David.
Well, look, this has been a pretty wide-ranging discussion. So I think I just want to highlight a couple of points that are the kind of things that Ben and I think are really important for people to take away from and keep in mind. The first of those is that, look, we've had a very big shock. And while we are getting out of it, and that's actually happening right today, we're still going to be in a very subdued demand world. It's still going to be a real struggle to get back to the kinds of levels of demand or spending that we had both at the household level and businesses in terms of their investment. That suggests that we're still going to have pretty stimulatory public policies, both on the interest rate side, Ben covered that beforehand, as well as on the fiscal side, as private sector demand recovers only relatively gradually. From a business part of that story, it's going to be really important to just reassess your business plan, not just for the next sort of 6 months to a year as we reopen and think about how to do that, but also over the medium term. How are you providing value to your ultimate clients, particularly to the extent your clients have changed their concept about what they're after in this post-pandemic world? And finally, the future. We can, should, and I hope will determine our own future. And it will be dependent on the sorts of policies we put in place today that don't only address the challenges of the post-COVID world, but also the sorts of things that we need in order to set the Australian economy for the kind of success that we've seen over many decades leading into this
Okay, David, the word crisis in Chinese has two components, a danger along with opportunity. I guess danger is very easy to get attention, but what we really should focus on is opportunity, isn't it?